My next guest does have Meta on his list for 2024, but not Apple, and he's sticking with Nvidia. Joining me with where he's finding opportunities now is veteran tech investor Paul Meeks, currently a finance professor at the Citadel. My middle school friends are laughing, Paul, because I called it the Citadel when I first moved south. So anyway, glad to be able to redeem myself. Welcome.
Great to see you.
So
Thanks for having me.
What would your thoughts be about Apple as a stock right now?
Yeah, I don't think Apple is a viable security at present. Right now it's trading for about 5 or 6 times what Wall Street is expecting for its long-term or secular growth rate. And yes, it's a great company. Does it deserve to be a $3 trillion market cap going to $4 trillion? I think going forward is going to be tougher and tougher to achieve those gains. We know the company has shrank revenues every quarter for the past 4, might even unfortunately do the same thing this quarter. And so I don't see the upside, particularly after the stock has done so well in recent memory. So among the Magnificent Seven, among the mega cap tech stocks, it's not on my list.
Very interesting, as its market cap sits right on $3 trillion today. You do like a couple of the other ones, though. Alphabet, for instance, Amazon, Microsoft. I see a lot of them up here. Meta as well.
Yeah, so I like among the Magnificent Seven. My favorite idea is Nvidia, and I know it sounds a bit cavalier to say and not particularly creative. But here's a company, again, we talk about the PEG ratio, PE to growth, like I just mentioned for Apple. Next year, the company should probably grow its revenue and earnings per share at about 70%. And its PE ratio is not even 30 times. It's actually not that much higher than the S&P 500. That'll be lucky to grow its EPS next year at 5 to 10%. So Nvidia is my best of the best. But because I don't see a recession in this country, and I do think that digital advertising will remain robust, I do like Alphabet, and I do like Meta. And as my number 2 after number 1 Nvidia AI plays, I do like Microsoft. It's come a long way, but it does have a little bit of more upside, in my opinion.
I see Micron on this list as well. I did get a question from a viewer, Paul, about Intel, which is about doubled this year, if I'm not mistaken. Wondering if that's a name you could bet on for next year. I don't know if you're, consider yourself a chip analyst per se, but what would you say about Intel's prospects?
Oh, I know the company very well. I think under Pat Gelsinger, the company is better managed. It remains to be seen if their entree into outsourced manufacturing is as wonderful as the bulls claim it's going to be. I do think that they will have a little bit of bounce back in the PC business next year, which still drives Intel, because PCs should have a unit ramp next year after having a couple miserable years. But right now, that stock is very expensive based on what I see is its long-term growth, both top and bottom line, of probably 5 to 10% best. So I would not buy it now. If I held it, maybe I'd hold it a bit longer, but I think that stock is expensive.